Hello, everyone. I'm Tyler Bishop, and I am here from Ezoic today talking a little bit about ad rates, specifically 2018 and the start of what is traditionally known as Q3. So Q3 is the end of June. It's halfway through the year. It's also the end of H1 or the beginning of H2. And so ad rates generally play or have a strong seasonal component to it. And you may see this on your websites at certain times of the year. Ad rates or ad earnings may traditionally be a little bit higher. Traffic has some seasonality too. So it's hard to kind of sort through some of all these pieces of information together sometimes. But I'm going to use the Ad Revenue Index, which is a free index that we have online that people can go and see just how all other websites in the market are earning compared to everyone else. We've normalized the data and sorted it all inside of the index so we can kind of get a little bit of an idea of how ad rates behave. And we're going to look specifically about some of the or specifically at some of the things in 2018 that are in some cases unprecedented and in a good way. And I think if you're a digital publisher, some of this information will be helpful as you start to make plans about your business and try to make understandings or form some understandings about the way that ad rates behave over time. So I'm going to share my screen here. And I'm going to blow this up full screen, and I'm going to go over here. So this is the online ad revenue index. It's something that we help manage. It's one of many signals that we look at on our back end. So there's some things on our side that we can see internal to us that show us just how unprecedented what we're seeing in 2018 is. But the ad revenue index gives us a really good look at this. So we can see here, this is the beginning of January. We've got a score of 55, but now if we look at the way things have gone since the beginning of the year, it's the strong linear progression, and we're actually setting index records in June and in May. So you can see we've got an index record here Sunday, June 17th, which is really unprecedented in previous years. Well, I'll get to that here in a minute. So you can see here a very strong year so far leading up to summer. Now, if we go back now and we look all the way back to 2017, we can see we don't quite have that linear progression at all. In fact, if we look at 2017 here, I'm going to go back a little bit further. There we go. I didn't go back far enough to start with. You can see there is a linear progression up to about, you can see that's January 28th. We go all the way up to March. We've got some peaks. We go all the way through April here. And you can see there is a nice little rise leading up to the end of Q2 here, but a 77 compared to a 100 that we were seeing at the high point in July this year. So nearly 30% higher here is what we're looking at this year compared to last. So just really unprecedentedly high. If we go now and we look at the high point for the entire year in 2017, we've got a 93. This used to be 100 on our index. So Black Friday 2017 beat the year before's Black Friday. So if we go all the way back to July or Black Friday in 2016, we can see we've got a record here. And then we can see that record was just barely broken the following year in 2017. But now we're into June of this year, June of 2018, and we're breaking records that have previously only been set on Black Friday. So it's really interesting this year that 2018 appears to be a year where ad rates are at their all-time high. If you're poised to be able to take advantage of some of these things, it's really a great time to be a publisher. Part of this is taking advantage of competition in the marketplace. And if you're not leveraging technology to manage different partners and also understand how user experience plays into ad rates in general, for example, showing too many ads can kind of ruin supply and demand long-term on your site, and that can be potentially affecting your ability to capitalize on this. But one of the things I want to go back to here and look at is, let's look at this giant dip here that occurs after the end of Q2. So we can see here, it's really common that at the end of H1 and Q2, there's a big drop, right? So we can see a pretty considerable drop here, and it actually keeps dropping and kind of bottoms out here in the middle of July. And then it sort of rises back up here. And at the end of July, we sort of recover. And then Here, there's kind of an oddity in that there's a drop here in August of last year. I don't know that we see that across the board. So if we go back and look at previous dates in August, there are some kind of bottom outs where ad rates are at a general low. In places like Europe, a lot of folks go on vacation during that time of the month. So that may be affecting marketer budgets, but it also may be affecting advertising campaigns. But if we go back and we look here, we can see here, there are these drops at the end of the quarter. We can see this one happened on August or October 1st. So again, this is the end of Q3 in this case. We generally see this at the end of quarters. We see these hard, sharp drops. So what we can anticipate now is that at the beginning of July here in 2018, that we're going to see another big drop here. Now, if history would repeat itself, what we will likely see is 2018, we will see this go right about here and then drop, and then we'll see things slowly start to recover here throughout the month of July, with things maybe not being as pretty as they've been in August. But generally, when you get into September, things are kind of, it's a bit of a race with a short drop-off time there at the start of Q3 or the end of Q3, the start of Q4. But then Q4 is obviously the time of the year where a lot of publishers make a significant portion of the revenue because of holiday spending from marketers and advertisers. And so what I think we will see through the rest of 2018 is that we will continue to see an upward trend with these drop-offs at the end of the quarters. And if those quarters end on a weekend or around a holiday, they generally are particularly sharp. So the end of this quarter obviously is going to be particularly negative from the standpoint that it ends not only on a weekend, but also around the 4th of July, which is an American holiday. So I think it's possible that we'll see a stark drop here, but I think that by the time we get into Q4, we'll be breaking records pretty much every weekend. It tends to look like that as the records seem to be being broken on Saturdays and Sundays right now. So it's just a quick overview for you guys as we look here at the ad revenue index. I'll stop sharing my screen here. Hopefully this has been helpful as we take a closer look at some of the ad rates. If this is something that you guys enjoyed and you'd like me to kind of dig into some of these things more often, I'm happy to do so. Leave some comments here, whether you're watching on YouTube or on a blog or someplace else. Just leave some comments or give us some feedback, and I'd be happy to continue these educational sessions on ad rates and ad trends. Thank you.